Hello, everyone. My name is Katie McCann, and this is Mark Pearlstein from Capital Partners.
Hey, Katie.
Hey, how are you? So today we're going to be going over new home buyer programs because a lot of the people that I have on my Facebook and LinkedIn, a lot of them don't. I think that they don't think that they would be able to afford something, or they don't think that they'd be able to get into the market. So, what are the new home buyer programs that Capital Partners has?
What interests me the most, getting first-time home buyers in a home. And by the way, a first-time home buyer is considered one that has not had their name on a deed for 3 years or more. So it doesn't necessarily have to be a first-time home buyer uh, completely, just someone who hasn't owned a home in the last 3 years. The most interesting product right now available for first-time home buyers is called Peak 100. Actually, it's a conventional mortgage, Fannie Mae, that you can actually finance 100%. The requirements to qualify for such a product is A, you have to be a first-time home buyer. Again, someone who hasn't owned a home for 3 years or more. It's somebody that cannot earn more than 140% of median county income. In the three counties that we mostly deal with here, Broward, Miami-Dade, and Palm Beach County, that number would equate to approximately $92,000. The other requirement is they have to have a minimum credit score of 660 or better. And most interesting, not only can they finance 100% of the purchase price, they can actually finance 101%. The additional 1% could go towards buyers' closing costs. And in addition, you may be able to build the rest of the closing costs into the purchase of the home and have the seller participate in closing cost assistance. So, right now I feel that is one of the best programs going. Um, there is another program, conventional program, that is a 97% loan. You will get better pricing. The more you put down, the better interest rates you're going to get. So other than the Peak 100 where you can finance 100%, there's also a 97% loan where you also need to be a first-time home buyer. But the caveat on that is that you can't earn more than 100% of the median county income, and that equates to about $60,000.
Okay.
Um, and then, you just have your normal 95% loans, which I think is when somebody calls me and tells me that they're a first-time home buyer, that pretty much means to me they're looking to buy a home with as little down as possible. My objective is always to try to, meet what their objectives are. Do you want to get into FHA?
Sure. So there's something that we just went over today. That's why Mark actually came down to our office to talk about is FHA loans that are approving condos now, which for a lot of people out there, if you don't want to buy something, obviously in our market, you're not really going to get a home that's you're not going to get a single family home for under 300,000 that's nice and move in ready. So a lot of people would like to look at condos but have had some issues because the way that you need to get in there, a lot of condos you have to put down 25% because of
Reserve requirements.
so,
So,
yeah. So let's go into that a little bit.
so let me explain that. The most affordable type housing available now, obviously, are condos. Those are more of affordable type housing prices. And up until recently, the most affordable type of loan that a borrower can get into with the least amount of money and the most aggressive as far as underwriting approvals would be FHA. However, up until now, there's been very few FHA approved condominium projects. Literally, just in Palm Beach County, there's a total of 5. But there's good news. What we used to call back in the old days, what was called spot approvals, were lenders that were able to determine whether a single unit FHA condo met FHA requirements for approval. It went away. It's now back. It's not called spot approvals anymore. It's called single unit approvals. There are some requirements that have to be met for a condo project to be eligible. But the biggest one is that the condominium association must collect at least 10% in reserve. So, to put it simply, if a condo project brings in $100,000 in revenue from condo fees, they have to be putting $100,000 aside towards, miscellaneous improvements, upgrades, what have you. That's one of the requirements. But, how it benefits the buyer the most is that the underwriting guidelines for FHA are a lot more lenient than conventional. You can actually, credit scores down to 620. In fact, you can even go down to 580. Rate will be higher if you get approved for FHA with a lower credit score, but much easier to qualify for. Debt to income ratios are much higher than conventional. And FHA is just a more aggressive way for a first-time home buyer that is maybe low in the cash situation, high on the debt-to-income ratios. It's a much more aggressive loan.
And it's also better for people who have had foreclosures. You said, I think it's like half of
Exactly.
what it is for conventional.
The guideline for conventional for bankruptcies is there needs to be a 4-year window and a 7-year window for foreclosures. With FHA, if someone had a bankruptcy, it's a 2-year window before you can get financing. And if they had a foreclosure to go with that, that's a 3-year window. So they can get back in the housing market a lot quicker with FHA than they can with conventional.
So this is really opening up the door for a lot of people who maybe before wouldn't be able to afford something in our South Florida market.
I really think so. I think that this is a good opportunity now. It's going to bring people that ordinarily couldn't qualify for affordable housing, at least in the way of a condo. Going to bring people into the market, and it's going to help. I really think it's going to help folks that want to get into affordable housing do so.
That is awesome. I'm very excited about this program, as is Mark. So please come out, reach out to me, reach out to Mark, and we will get you guys pre-qualified.